Good morning. Welcome, everyone. This is Admiral Markets. My name is Chris, and we're going to take a look at the Forex market together on this, let's say, 25th of August, Tuesday. Before we head over to the charts, though, and take a look at technical analysis, and this particular webinar focused on moving averages, two disclaimers. First of all, the disclaimer that this webinar is intended for a global audience, but it doesn't mean that it doesn't mean that it's suitable for everyone. To find out if it is suitable for you and other conditions and details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets in general are considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. And also, you are aware of the risk involved when trading. All right, Admiral Markets has a Supreme Edition. Well, you probably know by now, unless you're joining for the first time, Admiral Markets has a 56 additional features that are very useful. So you can find out more information about that. Just go to the main page, admiralmarkets.com, and then you'll find out more information. This button here, and that will bring you to an overview. All right, using moving averages. Very useful moving averages. I'm a big fan of moving averages. Specifically, the moving averages I use are Fibonacci sequence numbers. And I'm not saying that others are not just as good, but those are just my personal favorite. Those are the ones that I have created a feeling. I've created experience with those, and that's really what it's all about. I don't think that the 21 EMA is better than the 20 EMA or maybe even a 20 SMA depending on circumstances, but it's just something that I use and have built experience with. And that's, I think, what it boils down to. Choose EMAs that you feel comfortable with and then gain experience with those that you choose. But moving averages can be used in a lot of various ways as support and resistance, to gauge momentum, to see what the trend is. So we'll talk about that in live examples as we go along. And in general, nowadays, there are a lot more than EMAs or SMAs. In a study done, EMAs were found to be a bit more profitable than SMAs, but both were actually doing pretty well. But EMA did better. Anyhow, let's move over to the chart. I would like to take a look at the risk calendar, but somehow my browser is not really working as it normally is. No, I don't have any opinion on the LWMA, unfortunately, because I just use EMA. I have not really done any research on that. I know that Nennet that's something that he would really like to do, is test more different types of moving averages. But I'm pretty happy with EMAs. I don't have any urge, in the near future, to do that. Maybe one day when there's some more time. Now at the moment, I don't have any spare time, at least for the next few weeks, maybe in October again. But so I'm not sure exactly what the agenda is at the moment. I'm at a different spot. My internet at home in the office, or home and office basically, doesn't work. And that was for a bigger part of the city. So I had to rush to my parents, who live not all too far, luckily, and their internet is still working. They're in the part that it's still okay. But somehow the web browser is not really working that well. So if anyone can tell me if there's some big news, maybe that would be appreciated. Otherwise, let's take a look now at the charts. All right, so, well, it happened, didn't it? Wow. Big move up. And as I said, the long-term analysis, I did expect to move up to the 38.2 fib, but that it would happen so fast, with so much impulse. Yeah, of course, I don't think necessarily anyone could expect. We did in the long term always talk about this fib, right? And the fact that it's now in a consolidation and that it has the chance to go up to the 38.2 fib. Now, this is one way of fibbing it. or this could be another way of fibbing it. Both are really valid. At the moment, it hit that particular 38.2 fib and is respecting that. Now, the speed that it went up is so full of momentum that it's not easy to see a turn at 117 at a 38.2 fib that brings it all the way down to. It's possible, right? Down to the minus 272 target. At the moment, though, it's a bit. We need to also act with caution because this momentum could still push up. When looking at lower time frames, we could see plenty of space still for it to move up a bit. So because of that, I would say that this fib is also possible, and then the 38.2 fib would be a bit higher at 118. So obviously, I did say that this is that 117, 118 level zone is a resistance spot, and so far it has bounced already 150 pips from that zone. But I didn't expect price to move up this quick to that level, and therefore, although it was a resistance, now it's kind of in a no man's land because of the fact that price has moved up a lot and therefore could still push further a bit. I wouldn't be surprised maybe if price gets up to 118 or maybe who knows, maybe the 55th. With such a speed, it's difficult to say how far it can push. Anyhow, fact of the matter is that when it was challenging this 108 bottom, it was an important bounce or break spot. I'm not necessarily saying anyone should hold 108 up to here, but it is funny how indeed the price did make that move up to the 38.2 fib. So let's take a look at it a bit better. And here you can see the acceleration. We were also talking about this fib being the bounce at the 50, 61.8. And here too, difficult to hold that long, but um, yeah, it is quite impressive what kind of move it made. And that had to do, of course, not only was it the euro dollar, but the dollar yen. The global markets obviously went into a haywire, so certainly not the only current, no, not the only, let's say, product or financial instrument to move a lot. All right, but let's take a look. Now we're kind of stuck in between a spot where price has moved up a lot of power to the upside, but we are at a resistance spot. So it's not as easy, basically, as it was perhaps here when price was at a fib, or perhaps here when it broke out of the trend line, or even perhaps here when it broke above the top. So you can see that certain zones are more difficult. Where is it more difficult? It's more difficult when price is here, still has broken away, but it's still in front of the resistance. That's a difficult spot. If it's maybe in front of 115, that's a difficult spot. If it's in front of 117. So what are good spots? Here at the fib, here at the breakout, here above the top, here above 115. Because then there's still, what is the common factor here? There's space, there's space, there's space. Now, is there space now? Yes and no. It depends. Obviously, price has a resistance ahead of it, and but it has such a strong momentum that it could still kind of do this. Because normally speaking, when you have momentum like this, you see something like this still pushing forward, and you get some kind of rising wedge pattern. You get divergence, and then there could be a higher chance of a bigger correction or reversal. That's typical. The problem with this typical scenario is that we already reached the main target. So I am in a kind of cautious area. I think that price could easily retest this top again and perhaps make a double top. So from that point of view, a long still to retest that high is maybe still something to be reviewed. From that point of view, there could still be a trade maybe up to test 117 like this, that zone there. It could break even the top, as I said, and make kind of a how do you say it, a slight channel like this, right? Up to 118, and then maybe find another resistance spot. So let's throw in some moving averages at the moment. Moving averages will not really help us with the euro dollar because they all will point and hint to massive bullishness. Why? because look, when price started to break above the moving averages and when they started to align themselves, the short term clearly above the long term one with an ever increasing gap, right? That was a breakout as well, right there. And it stayed above the 21. When price stays above the 21 EMA, that's my cue or um, tip that price is in a very big impulse, right? So that it certainly was. And now it's hooking back to the 21 EMA, which typically is a bouncing spot when you have such a thrust. So from that point of view, we are at, the euro dollar is at a potential bounce spot with some space to the upside. And that some space is not that bad because 117 is still 130 pips away, 120 pips away. All right, let me see if there's any news. Oh, my browser seems to be working again. Let me open that. I have some comments here. We'll talk about this euro dollar in a second again. Hang on. Yeah, that can happen if you have entry, pending order perhaps too low, and it starts to break, and you're waiting for the pullback, and it just doesn't pull back. Then it's a shame, and it's of course frustrating, but it can happen. You can move a move. You can miss a move like that, indeed. Let's see. In the long term, I still expect the euro dollar to go down, indeed. Although that was my analysis, and I don't necessarily see any reason to change that as yet. Long-term analysis was indeed when this third leg finished, get away 4, go up to the 38.2 fib or the 23.6, but it actually went through the 23.6. So basically correct up to the 38.2 fib, max 50, and then find resistance for downside down to parity. I don't see anything necessarily changing that. Obviously, that upside, that strong upside is kind of making, let's say, the probability of this to be the turning spot a little bit less, that's for sure. I mean, I can't say that momentum is not totally not important. That's why maybe there's a chance to go up to the 50 fib. Ultimately, the long-term scenario, though, I think for that to change would have to be a break above the 50. Or if we get some downside here and we bounce again up and we keep above this. The key for downside is really when we break below this support trend line here. So perhaps December or early next year, we could see that rate hike. And yeah, I would expect the euro dollar back to go back down. At the moment, I wouldn't change that as yet. Let's see. Okay, we got Euro. Thanks, Edith. Thank you so much. We have Euro German EFO. I got finally browser's working. IFO business climate in a minute. Consumer confidence in the US. I think any and every single US data point will be very scrutinized at the moment. So this one probably too could be interesting. We have business climate in about a few seconds, so we can take a look at how that's going. Well, personally, I expect the EU to fall still pretty soon. Let me take a look at the monthly chart. This is 1, 2, 3, 4, the 5th month. Yeah, next month will have to be bearish. If it's not bearish next month, if the euro dollar monthly candle is not bearish next month, then we might see a bigger correction on the euro dollar. My time limit was September. That's why I still expect the downside. But if it doesn't happen by September, then I would start adjusting it. So not only the 50 fib is important. If it breaks above the 50 fib, that's one invalidation level for my analysis. The second would be timing. No bearish month in September, it's over. Bearish month in September, fine. But then I need a break of the bottom at 104.50 by October, in October. If it doesn't happen by October, again, invalidate. So those are my two borders. If those things happen, then what I had in mind was partly true, but not fully, because the part that was true, we got retracement, but it didn't continue lower. All right, question, how can you catch a break? Well, it depends what tools you use. We were using last week a trend line like this. So that could have been a trade. And an entry, for instance, above this fractals. I mean, obviously, if you're not behind the charts at that point, or if you don't have a pending order, you might miss that. That can happen. That's part of trading, unfortunately. What would be the alternative? Well, we see these fractals here, for instance, above the moving average. That could be with the moving average aligned. A break above that could be another entry, 111.50, about 60 pips up to 112.10. So a break above these fractals here. Or, basically would have to be intraday breakouts, really. That's the only way, because there are no significant pullbacks. So once it breaks above 111.12, basically looking for, let me do that blue, within this zone, looking for above this top, looking for a lower time reference for follow-through breakouts using Camarilla and fractals, for instance. So, from that point of view, it could only be breakouts on lower time frames because it keeps pushing, pushing, pushing. That would be realistically the only way. It's not easy. Obviously, there are multiple points here that are possible. The bounce, the break, and then the intraday breaks here. But doesn't mean necessarily that someone will catch one or two or three or four. Thank you, Caitlin. Well, yeah, I mean, predictions like that, some are wrong, some are right. I was happy with the fact that I had AUD correct, gold I was right on, the euro dollar fall as well. But I had some, ones that didn't go well, like the pound USD back in, let's see, let me take a look where that was. Yeah, here, this swing high, swing low. Personally, I didn't expect this top to be broken, and it did. So can't win them all. Um, yeah, anyhow, back to the euro. Sorry, got distracted here. So this perhaps could be a breakout too. A break above this fractal, and probably stop loss just below this bottom here. Now, what if price actually doesn't break above this fractal, but starts to push lower? Then obviously it pushes through the bottom, which means that this could be a bouncing spot too, by the way. It's a long-term moving average. And it could bounce back to the trend line and retest the same trend line again. Go back down and then maybe break this time. So that's something to still look for. We did have some momentum here, so we can put a fib on a momentum like that. And we can see price already stopped at the minus 272 target. You see that? So what would be the next one? the minus 61.8, right? Which is 114.70. So from the quarter theory, I don't know if anyone knows it, but it's just explaining that quarters are important. A 25, a 75, a 50, and a 0. 115 is a strong level, right? It's a round level. And anything within a 3/4, so 75 pips around that level is still especially 25 pips around a whole number, such as 117, 114.75 is a 25 pips within 115. Could be another factor, another support reason. So 114.75, if it does go that deep, could be an interesting bouncing spot, plus the long-term moving average. From an hourly perspective, price would basically dip a bit below the moving average, and most of the time when it dips below that, the moving average, the 21 EMA, for the very first time after such a strong move up, it could be a bouncing spot. In general, though, it's the whole scenario is a bit awkward because of the fact that we did hit potentially a 38.2 fib, and this is kind of like the stickiness that's just always hanging around whatever I'm thinking, because um, it's just awkward how fast it went up to the main target. What now, basically? And that's different with the pound USD. Pound USD finally broke to the upside after kind of going sideways awkwardly for a long time. And you can use moving averages for this too to see how unpleasant it was for trend traders, at least. For range traders, perhaps different. Range traders maybe we're looking for some bounce and break spots, and you can see that when moving averages are looking like this, that it is yucky. And price was slowly but surely building kind of this resistance and even this support, which was looking like a wedge, and price broke above that wedge. So from this point of view, daily chart, pound has a lot of space up to resistance still. So perhaps moving averages are aligned. You can see 21 EMA is above the 144 EMA, the long-term one. Even the daily chart has moving averages aligned, and a good daily candle breaking through that trend line. So from that point of view, this pound USD could be maybe a bit more interesting. Thank you, Keaton. Well, it's I think I think it's easier to make an opinion like that if you probably look at it wave analysis, I think. So if you're interested in doing that, then that could be a good step, I think. All right. Well, we'll check it in. Does anyone have that figure for EFO? It's forecasted was 107.7. I think no problem. I mean, it's not for everyone. It's also just a matter of getting experience, I think. I think probably that's the most important, to be honest. Let's see. So anyhow, pound USD. We don't have any pound news. This is the fourth candle, so I think there's nothing wrong with a potential breakout here. Something like this resistance level. It pushes through that resistance level. There's space up to the next top, 159. We're above 157.50. So that looks good. Let me take a look at Camarilla. That always provides a bit different perspective. But from a moving average point of view, oscillator point of view, tops and bottoms point of view, I think it looks okay. All right. We're halfway. That's the only thing from a Camarilla point of view. The break would be above H3. So this is an early break, the one I talked about. So yeah, that would be one way of taking it would be this break, but realize that the H3 could stop it, and then we could see still maybe a range develop. If you want to see a more trending breakout, then the H3 would be something to look for, and above H3 up to H4, and then with the main target being H5. Now the dollar yen made something similar. Wave analysis was already saying that this would probably not break, this upside would not break this top. I didn't expect it, and it didn't. It finally failed. It took very long. That's sometimes, with these reversals, price is just going nowhere. Slowly going with the trend, slowly going with the trend, slowly going with the trend. And then, boom, massive, massive, or yeah, sometimes it varies, but sometimes it could be quite impulsive out of the blue. To a certain degree, that felt like that on Monday because this was indeed quite an acceleration that, was not necessarily to be expected. So ultimately, this break indeed did happen. This channel did break. This channel did not break this top, and it did turn out to be a correction for more downside. So that was just like the euro dollar. That was good. Now trading it though required taking the break or taking perhaps some breakouts on lower time frames like the 1 hour chart, using really the same thing, intraday breakouts, because it didn't pull back. So the only solution here is intraday breakouts, really. Now, what about now? Let's take a look. We can put a fib from here to here. And although we didn't reach a similar level like the euro dollar, we did reach the minus 618. We had a big bounce off that as well. And I would still expect more downside on this dollar yen. This is a massive momentum, so similar to the euro dollar that could still see the top being broken a few times. The dollar yen could still break the bottom a few times. The difference with the euro dollar is that it's at a major resistance zone, in my opinion. The dollar yen, I don't necessarily see that particular major support at the moment. It, from my opinion, has space to fall down to long-term moving average, for instance. Now that it broke below the 21, it could still hook back before falling, but it's a bit different than the euro. I don't necessarily see a reason here for a if I don't see necessarily a reason why it could not break a bit lower. Let me say it this way. So the dollar yen and pound dollar perhaps a bit more interesting. So where could it continue? Let's take a look at hourly chart. Probably this hourly bottom here. If we have a 30-minute bottom here, those would be breakout levels on two different time frames. And the 50-minute chart too. Moving averages are aligned. So, break below this fractal, break below 118.90. That could be a breakout. Stop loss above the top here. But that's funny, isn't it? Because if you put a stop loss there, it in this case is a massive, because of the volatility in the market, 150 pips on a 50-minute chart. The market is just, because of its massive movements, um, it's going to be, on these particular pairs at least, very tough to find a tight stop loss because the market has just moved so much. I mean, typically this would be 30, 40 pips. Now it's 140 pips. And that could be a bit problematic. The EFO actually is an hour. Sorry about that. I thought it was, got the times mixed up. Let's take a look at that market heat map. Okay, this shows the daily movers and movement on the market, basically. So let's take a look at that. And that could be very interesting today because of yesterday's gigantic moves. I'm sure we're going to see an interesting picture here. So yeah, that would typically be an okay breakout, I think. I don't see anything against it. But obviously, it's not going to be something that has a tight stop loss. All right. Wow, look at this. Scattered and big ranges here. Pound New Zealand even the most. Big stuff here. All right. Audio is the broke through the bottom, but look at that pin bar. Let's see if there's something better. Kiwi the same, broke through the bottom, but a pin bar. All right, dollar CAD is, wow, finally actually breaking through these trend lines we had yesterday, sorry, last week, and can make this the new support trend line like this, but already reached target. Let's see if there's anything else. Your yen, ooh, massive whipsaws here. Stopped at the 88.6 fib after failing to break the top here. But this was really a wild ride. Stopped 23, 38, stopped at the 50, and then this fib. Pound yen fell a lot. Pound odd accelerated as well. It's a bit of a difficult market. I mean, I'm not sure if we talked about this particular fib. This was the last week too. And at the respect to the 50 fib, I don't remember if we talked about it, but look at that move up here too. Acceleration up to the minus 2618. Everything is just massively overstretched, no matter how we look at it. Look at this. From 168, almost 2,000 pips on the Euro New Zealand. Euro New Zealand here in April was still below 140. Move went up to 190 almost. Break above this resistance. The two green lines are actually resistance that became support, and almost 2,000 pips out of those 5,000 in really just a few days. Amazing. Pound New Zealand. This is one of those cases where we had actually a break of the triangle that turned out to be a false break, and you get the true intent to the opposite side, and then the break of the triangle to that side. But that's difficult to trade with such a power moves. Also almost 2,000 pips. So yeah, it's a bit of a crazy market, obviously. BT is asking, do you use the wick as part of a fib? Yes, I would just fib to the top. If there's, even if the candle is a wick. So are there any particular pairs that maybe are more settled? I don't know. Doesn't look like that. Everything has been gigantic movers. Commodities weakening like CAD, commodity pairs like CAD, Kiwi, well, Kiwi depended on Aussie, and those have moved, weakened a lot as oil was weakening. I don't have the ruble, but I read that it was weakening too. Let's see. Silver fell, as we can see here. So yeah, it was very vibrant day yesterday, wasn't it? It was very yeah, it was very dramatic. News of course was covering it like crazy and etc. Dollar index really breaking through this triangle now. We're trying to break through. With a daily candle, it is. And that could be at the interest rate, obviously, the fact that it doesn't look like we're going to get a rate hike in September like the market was really expecting, certainly the start of it, then stories about China and their potential problems in the stock market, etc. Another reason, perhaps, um, yeah, the month of August, maybe some liquidity. I mean, there could be various factors maybe in the mix. And it doesn't, to a certain degree, doesn't surprise me. I don't know if anyone remembers, probably not, but I did say in July that typically August is a bit of a quiet month, but I said maybe this August could be a bit different because of the fact that there are these developments in play that could heat up the market and could make it a bit vulnerable to big movements like this. And it yeah, it finally did happen. And this was kind of the crazy move that I thought there was a chance that could happen. Okay, cool. Beverly confirms. Great. Let's see. Caitlin, do you know and can you tell me if Admiral Markets is ECN? Yes. You can find out more. Let's see. So is there any, I mean, I'm a bit cautious with this type of market. Is there anyone who wants to look at something specific? Because I mean, if we look at moving averages with this market, what are we going to see? Massive upside, or sorry, massive upward down, just massive movement. Price is kind of back to just moving averages, but the movements are so large, and stop loss. The volatility is not going to disappear right away. There's still going to be some. The movements will probably die down a bit. I think at least you never know with such a volatility market, but obviously it's a difficult environment to trade. Is there anyone who sees something they think like, okay, I would actually like to look at this pair, this time frame? Let's see. Here you can find a bit more information. Here you can see that this particular package is NDD and here's ECN. So if you want to know a bit more about ECN, you can find out here, probably on one of these links here. Let's try this one. No, that brings you to a login. But anyhow, your question was if they are. So here you can see they are indeed. This one is ECN execution. Um, yeah, indices, sure. Oil below 40. DAX. Wow. Well, let's see. Let's recap a bit. Price was around here, right? And we're saying like that's a unknown territory because it could bounce, but if it does break, then obviously, I mean, if we're at support, so there are two things that can happen: either it bounces back to resistance here, or it breaks, and it broke, um, and it accelerated really down to the long term, perhaps. Anyhow, let me get rid of this channel. And well, depending how we fib it, price is really accelerated far. If we put a swing from this top to this bottom, we're also at a target. I think we need to look at longer term charts. Let me do that. We need to put this a bit in more context, I think. Let me get rid of everything here. In general, though, I mean, before maybe diving into specifics, yes, China, I agree, Beverly, having its influence. And also, I think personally, just looking at the charts, I think if you look at the technicals and the slow upside, rising wedges, divergence on these indices, obviously it dragged on and on and on and on and on. And eventually, as a contrarian, thinking that the market would finally maybe then make that reversal to the downside, it never seemed to happen. Finally did. So you can see that these reversals are really difficult to catch, especially in the stock market, just because it just kind of like slowly grinds up. And it's done that for so long, and eventually you think it's never going to happen, and then it finally did. And it's really so much patience is required to catch that reversal because I mean, really, how many weeks has this lasted? And finally, this reversal has happened. Look at the DAX too, for instance, with pushing up and up and up and up. And well, this is maybe a bit of a more uptrend actually, to be honest, than the American indices. So that maybe was not as clear. But anyhow, monthly chart is back at a short to moving average here. I'm not sure. It could be at a bouncing spot again. But same thing as the euro dollar. With such a momentum, wouldn't it be able to push a bit lower? So I think yes. I think considering the momentum, it could push lower. But it would make it easier to trade if there's some kind of bear flag that gets broken. Sorry. I really don't think that there's moves like this are so unique in a way that I wouldn't use generalizations really. Like because saying, for instance, okay, the wilds were definitely wild, the moves were definitely wild yesterday, but to say because of that they will fully retrace, I, I I think it's too kind of unique of a moment in a way. I think that considering such a big momentum, um, I don't see an overly aggressive retracement move back as yet. I think therefore the momentum can push through, can follow through. But in general, I'm cautious about any analysis at this moment, as you can see, really. Either way, retracement or continuation. With most of these pairs, I would favor continuation. One of the exceptions is the euro dollar because it's at such a big resistance. Doesn't mean it couldn't do it. That's basically my message. I really don't have much more to say than that. In fact, I think that um, that maybe today's webinar could be a bit short. I don't want to, be repetitive, because I think I have a feeling I'll be saying the same things. Maybe we can take a look at the euro dollar again. Euro dollar is not breaking through this resistance line as yet. Pound is still hovering right in front of that resistance and hasn't reached stage 3 yet. Dollar yen hasn't broken this bottom yet. So nothing really new happening here. Let's see. Any questions? Yes, totally agree, Beverly. It is messy. It is aggressive indeed from this point of view, but from the volatility point of view, just from the sheer movement. It's just a tricky environment. I think so too. The gap. Yeah, gap's very true. BT indeed typically kind of as a rule of thumb, not that I have any particular stats on that. Well, I actually saw one, but it was a long time ago. I don't remember it. Anyhow, um, typically what I know from gaps is that if they get filled within a reasonable amount of time, let's say if we're looking at an hourly chart and we have a weekend gap, if they get filled in within, I think, 6 to 12 hours, it's still a major kind of attraction. It's a major level that could still, you have to be careful of because it could get filled. But if it takes too long, let's say more than the 12 hours, then um, its importance is decreasing. That's what I know. I personally, in practice, never really did anything with that. So I don't really cannot verify it. This is what I've heard from other traders. I don't know. I never verified that. So, but yeah, a gap. So basically, the essence is that gap has some importance, but eventually, indeed, price can definitely move away from that area, and it can take a while before that gap gets filled. Sometimes very long. Well, I guess with that said, we'll probably call it the end of the webinar. I hope to see you tomorrow's webinar. Maybe things settle down a bit again. We have a strategy webinar, and then it's going to take a look at, now I forgot. 1 second. Oh yeah, Murray Math. Murray Math swing trading tomorrow. Strategy in the morning. Murray Math swing trading in the evening or late afternoon. Thursday, 4 p.m. GMT time. We're going to take a look then at the night, spotting and trading the support and resistance. So we're going to take a look at which levels, which support levels are more important. Why are they more important? Which can we attach importance to? Maybe others, maybe less importance to, etc. So hope to see you then, and careful with trading, and have a good day. Cheers.